And I had one in mind, but that one hadn't reported earnings yet, so we vetoed that one out. And then, we were looking at Discover, and Discover just had earnings. And I love that you even gave me the numbers now, because now I even love it even more. I didn't know enough about it before. Now I'm like, ooh, I really really like this. So my initial approach on Discover, prior to you giving out all these earnings numbers, I was looking just kind of like a directional, just hitter. Just give me a, a bar by bar. How can we play this? But the cash flow side of me just cannot unsee, how I could potentially turn this and put this into my portfolio as well.
Mhm.
So I'll give you the choice. You're my coach, you're my mentor. So directional or cash flow. If directional, I'm looking at a bull call. Just a
Okay. All
simple
right.
hitter.
So is this a question of trade v invest?
Yes.
Okay.
Well, initially, I was coming just straight bull call,
You're
just
you were just like, I
short
like
that
the
for me.
breakout and let's just do a bull call spread initially.
Yeah,
But
but
based
yeah,
on the conversation, you're like, I might want to assess this a little bit differently. Is
but
that
then
kind of
you
where
come
your
out and
head's
you give
at?
me then you come out and you give me all these beautiful numbers about Discover, and it is on the tackle
Mhm.
25, and you're like, I'm like, oh, okay,
I
maybe,
I
possibly,
well, and honestly, I think both could be the answer. Well, we don't want to do both, but I don't think there's a wrong answer
right.
here, right? I do like when you're looking at it from a short-term perspective, I would say give me 2-3 days hesitation, break out of 100, and that's a directional trade up into the 200 daily moving average. That's a good trade setup following a good response here. And so I'm not going to throw cold water on the trade because you got what you want. You got a double bottom, you got a double top, you got a catalyst on earnings. You broke back up above everything, and you came right into a significant whole number, which perhaps outside of $10, I don't know if there's more of a significant whole number in the market than 100.
Mhm.
I think it goes like quite frankly in my own personal ranking, it goes 30, 10, and 100. I just had to throw that 30 in there. But no, 10 and 100 are like 1A, 1B in terms of the significance of the psychological zones. And so it doesn't surprise me that this candle stopped on like an Allen Iverson crossover back in 2002, right there at $100. And so, yeah, 2-3 days of consolidation, flag-based pattern, a bull call spread where you're looking at, buying the $100 strike price, selling the 110 strike price, targeting 106, 107, and basically you make a fixed risk type trade there. That makes some sense. I mean, when you're looking at, and again, I'm not in the mood to chase things from a short-term perspective. I would like a little bit of a hesitation here, but when you're looking at that potential trade there and coming in to Discover, I wouldn't be looking long-term here. I think 52 days is fine.
Mhm.
You come out to the options market, and let's say we have a fairly similar price. We are looking at a potential breakout of 100, but it'd be a simple trade. You come in and you buy the 100 call option. You then come and sell that, the 110 call option. What that does here is it creates a little bit of a spread. And I sold the wrong one there, M. Let's do that again. So we're going to buy the 100 and then we're going to sell that 110. And what that does is it creates a spread, right? And that spread, if you come to the risk profile, looks a little bit like that. It's fixed
Mhm.
risk, and we call it fixed risk because you see this flat line on the downside. You can
Yep.
only lose what you put into the trade, which means we can only lose $368 if we're ultimately wrong. And that's if we don't place any stop loss, which we absolutely would place a stop loss. But the reality is, if you're not in the thirst to say carry risk in this environment, you need more evidence. You're a little bit nervous about the market. You're not ready to add a long-term, something longer term to your portfolio for whatever reason. Maybe you're still in I was late to, the market was tanking. I was late to dump, and now I'm still in the process of kind of dumping. Maybe I think you need to adjust your settings there, but yeah, I can understand the caution. Here's my point.
Mhm.
If the
Mhm.
caution's there, a short-term trade with fixed risk makes a lot of sense here. makes a lot of sense. And yes, I would be looking December, and I would be looking at the 10-point spread there. You can also approach it if you're a little bit more conservative in the, hey, let's not look at directional, but let's just look at from a pure theta perspective as well. You can come down, $90 here, right there. 90 is that
Mhm.
significant support level. You come out to the weekly chart, that right there at 88 and at 88, 80, $89 is right where the 200 weekly is. You can come into the options market and you can say, you know what? I don't like direction. I'm very, very conservative. I don't like direction at all. Well, that's fine. You can come in here to the 31-day contract, for example. You can sell the 85 strike price, come all the way down to the 80, and you can create a little bit of a spread. We can go out to a little bit more time, even a little bit less time frame, and you can say, let me come out, let me sell right there at 90, 19 delta with 24 days left, just sell right at that support level, for example.
Mhm.
Sell that, come in, bracket that in around the 85, and you can create a pretty significant spread there. So if you're selling a vertical there, coming into the 85, that was an old school way, by the way, right click.
Only you do that.
I listen. It's old school for a reason, right? But you can create just 24 days out. You can get yourself 70-cent credit. Margins 430 here. You're selling a 20 delta contract. You're getting a post earnings bounce, and so you're selling right at that support level. Your bracket down to 85. That makes sense as well. So from a short-term perspective, yeah, I think you could, the directional traders, bull call spread 100 by 110 on a breakout of 100. Theta traders could care less about what I just said, and they would sell the 90 by 85 with 24 days and just say, let me take the probability.
Yep.
I like long term here, though. I do. I like long term here. If you're looking to add long term, and I'm talking specifically to you, not to everybody else, because
Yeah.
that question was pertaining to you, and so
Mhm.
my answer is directed towards you. But I like long term here. I think there's a lot of trades to be had following earnings, and in this environment, I told you this earlier today. My philosophy is I don't know if we have another leg down in the market. I said it yesterday in the reversal webinar. There's a lot of things that could happen over the next 6 months to create more panic in the market. But I also believe there is some significant value to be had in this marketplace, and the people that are finding that value and their time horizon is 5 to 10 years, they're going to be extremely happy that they're picking up quality stocks right now in this environment. And so I like Discover long term here. I think it's got the combination of technical analysis plus fundamental analysis. We're talking about a stock here. Once again, did I say it was a tackle 20 type
Yes.
stock? I just want to make sure that we knew that. But we're talking about a stock right now with a forward P ratio of 6.8, a current P ratio of 6. Its price to book ratios are pretty decent at 210 and 232 on price to sales. Price to free cash flow is fantastic at 4.6. And quite frankly, outside of the red numbers on the performance of this year, which is quite frankly largely due to what the market is doing and not necessarily what Discover is doing, I think you got a rosy picture from a fundamental perspective on Discover. So I like it long term here. I like it long term with the philosophy that anytime you see weakness, that you write a covered call immediately.